September the 24th after the market close, and we're looking at a chart of S&P 500. And here is a bull flag formation on this on the market S&P 500. This was a candle here on 14th, 15th, and then so on 1, 2, 3, 4, 5 days we in a row. We have drifted down in a flag like pattern and in a very tight range, not a very big range. You can see that the range is not very big here today. The range was in fact very small. It wasn't very big. The market had all these hiccups from Europe and all that, but it is just consolidating here, especially when it ran up from 1400 to here, which was it closed on closed at 1465. So 65 points it ran up in few days, and now what the market is doing is taking a breather, consolidating here. This is a continuation pattern which will result most likely a break to the upside, and it will just rocket from here 1477, 1470 levels. Remember, there's not much resistance on the left, and if you look at it 5-year chart, let's take a look at it 5 years. You can see we're up here now. The market high as of December 23rd 31st 2007. So we really have beaten those. This was the market was before the financial crisis really took care of it, and it dropped. But now S&P 500 has recovered almost 100% from that area, and that is proud to say, because there are a lot of reasons for it to recover, and one of the reasons is recovery, economic recovery. The other thing is the federal help, QET, QE1, 2, and 3rd. Now this is the third quantitative easing that Bernanke did, and this is why you're seeing Mr. Bernanke putting this market through the roof, and it will continue going higher to, I believe, to the balance of the year, and we should have make some money here. So this is a time when you double down and make as much money as possible and not hold back. That is the time when it's not selling off and shorting or other stuff doesn't work. Only the long positions and doubling down and making as much money as you can, and staying close to all the trades that we put out. They definitely will make money as long as there's some not very bad market reaction. So that's why I'm suggesting to everybody to keep an eye on it and make as much money as possible. This is the time, because there will be time we will be sitting on hands and not doing anything, which oftentimes happen. Look at the chart on RUT. It has also this flag like pattern here. It is not as even and as good looking as the pattern we had here on S&P 500, but it's just comparable. It's just a breather here. It's a little continuation pattern, and probably is resolved to the upside soon. The market is a little bit overbought, is getting worked off here on stochastics and the numbers. Now today, let's start looking at some of the stocks. Apple, which is what we have here. Take a look at it. Apple dropped unexpectedly, even though we had iPhone orders and everything, but it dropped here towards the 21-day moving average and finished the day at 1690, down 9 points. There was some selling here involved, and it is extremely overbought, so you can expect the stock to drop. Friday was option expiration. It got hit there, but it finished the day at 700. So there is a little bit drop here. Google, we're going to take it up. This is the only stock that has been going up relentlessly for the last 8 or 9 sessions. You take a look at it from 913 to up to now. It has gone up 50-60 points, 690 to 749, and I think it's going to top off here because it is hitting the Bollinger Bands. I have not put out the Bollinger Bands, but that's where it is. It's just hitting those. WFM, that's the stock we have been trading. Is a chart that I want to share, that we did not put the chart out, but you look at it, beautiful chart with that beautiful trend line, and it's finishing the day at 100, and it's expected to go up here. But you see how solid this trend line is, 45-degree angle, and everything above that, nothing in below it. So this is one of the better stocks that we have selected, and we're going to be trading it for some time. So that is all for today's action. I will get back to you with another edition.